Let's take a look at some information and charts on Compound Finance for Brave New Coin. So Compound is in the DeFi ecosystem in the lending and borrowing pillar. And the best part about it for people who are new to the space or are unfamiliar with using this sort of stuff, it's stupid simple, stupid easy to use. The UI UX experience is excellent compared to historically what crypto has been known for over the years. Very similar to Matcha in that regard, in that it is sleek, it's clean, it's easy. That's really the best thing it's got going for it. This is the website compound.finance, and they break down the lending and borrowing differences here. Supply versus borrow, who's borrowing how much on any given day or moment. I don't think any of this is particularly super important. It's really the trends you want to pay attention to. So what is the supply over time, or the amount being supplied over time for loans versus borrow? How much is being borrowed? What markets are being borrowed? That sort of thing. What does the APYs look like? 8.6% on USDC. What does it look like on stable coins versus non-stable coins? How many options do they have here for lending and borrowing? They have a total of 10, and they're always voting on adding more or not. So it's really 2 or 3 clicks, boom, you're in. You can borrow, you can lend. You can get liquidated if you borrow, so keep that in mind. But overall, extremely simple to use and accessible from a hardware wallet or software wallet. If we look at the governance piece, they have ongoing proposals to add various markets or adjust various things. Now, I'm not a big governance token guy because once we do enter a bear market, I suspect that many of these governance tokens will suffer considerably because nobody will care. You know, who cares about governance when everything's going to zero? That's just my general take on that. But when people want things done for the proposal or done for the coin, you know, let's say I'm some altcoin proponent and I want to get that added to Compound. One way to do that would be to buy a bunch of Compound, right? And then get behind that proposal. Put money where my mouth is, basically. Now, that won't always necessarily work. You know, when we're talking about representative democracy and lobbying in the real world, it's very similar. You know, if you're an entity with enough lobbying power, essentially, you know, you can get your proposals or ideas passed, but there's always the rest of the voting block, obviously, that's going to have a say on that as well. So they're probably not going to add SafeMoon here, even if you do corner the comp market and somehow bring a proposal about, right? Like that probably isn't going to happen. Just as an example of something that would be ludicrous and why you only see a very limited select amount of coins here for borrow and lending. Mostly stable coins, mostly DeFi related things, and then basic attention token, which shouldn't even exist, but that's a whole nother video. If we look at TVL, it is near 10 billion according to DeFi Pulse, and it is above 10 billion according to DeBank. Borrowing volume continues to increase, so people are getting more and more comfortable with this. Some of this is price appreciation of the various assets, obviously, but there isn't some massive steep drawdown here with borrowing volume. Liquidation volume, like I said, you can get liquidated if you borrow. That's just part of the game. And those have decreased, but are still quite high per day on a relative basis, really. So liquidations happen, definitely. So it's a system that works and does its job accordingly based on the smart contract parameters. If we compare Compound to Aave and Maker, really the other two giants in the lending and borrowing sphere, Compound is in the middle of the pack as far as deposits. It leads in loans, and it also, leads in loans. So 7 billion in loans relative to Aave and Maker, but there's no giant discrepancy here. I think all of them are decent projects for their own reasons. And you can look at things like total net borrow per day, total unique borrowers, which is probably a better metric to pay attention to when you're trying to figure out value of a project. You know, where are the flows? Where are the people going based on incentives, based on APYs, etc. And Compound basically has a 40% market share of all total loans. If we look at the transaction counts and average transaction values for Comp, the token, again, it's a governance token that doesn't really play a big role in the lending and borrowing specifically. You know, it's not like SNX where you need SNX to mint your synthetic tokens. So don't expect these transaction counts to ever look great. Basically, they've been on a downtrend since the launch of the token, which is fine. I mean, you're not going to move Compound a lot anyway. Average transaction values have increased along with price, along with an increase in ETH fees. So that makes sense and is congruent with what you'd expect. Nothing super important to read here. The reason I even look at these on governance tokens is just to see if there's any oddities, aberrations, anomalies. You know, is there a bunch of comp moving on chain that nobody's talking about, that sort of thing. If we look at NVT and active addresses, NVT has decreased since the initial release of the token. So there has been increased on-chain activity relative to market cap since the token has been released, and it's kind of maintaining a sub 100 NVT. If you're bullish comp, you want to see NVT go as low as possible because that says price is undervaluing the on-chain activity. If you're bearish comp, you want to see NVT rise substantially. If we're looking at active addresses specifically, again, much like transactions per day, it's not going to be too useful in my opinion because it doesn't play a big role in day-to-day operations of the smart contract, basically. Now, if there's some big vote or there's some important transition for the token, you're going to see that spike on active addresses. But in general, most of this probably represents just speculative activity and isn't exactly organic comp movements other than just price-related stuff. If we switch gears to technicals, we have the 50 in the green, the 200 EMA in the red here, VPVR volume RSI. And over the past few months, comp had been consolidating in a bullish fashion with a pseudo inverted head and shoulders at the top of a range. Not exactly something that you're going to see in a textbook for chart patterns, but we see it a lot in crypto where we get continuation patterns that would otherwise be reversal patterns in various places. And, you know, maybe I'm just crazy and this isn't a chart pattern at all or wasn't, but it sure behaved and acted like one. And what we did at the time was we measured the high to the low and you get a 1618 fib. You can always keep adding 618 fibs, but the expectation at a minimum is a movement to the 618 fib, the 1618. In this case, it moved to the 2618 and is back to the 1618. So overall, it moved as expected. Looks weak off of those highs right now, but still remains above the 50. It's probably going to need more time, honestly, to consolidate up here. That's probably for the best. You don't want these massive rises and sudden drops. That's not how most people want to trade this market in general. There is a lot of volume at around that 450 level relative to anything around it. So 450 would be definitely the floor I'd expect on any of this down movement before this gets into real trouble. But overall looks fine as far as sitting at the highs or maintaining the highs above that 50 SMA. If we look at the daily cloud had you get in mid-April based on this TK cross here. So that was ahead of the horizontal break on that inverted head and shoulders thing. And it's broken up since then, obviously, but now it's probably going to retest this Kijun level somewhere around 650. So for me, in a vacuum, that's where bids would be if I was looking to get in this market with the expectation of a bullish trend continuation from there. Comp BTC also had an inverted head and shoulders type of pattern, shoulder, head, shoulder, you know, whatever you want to think of this as, with the 5200 bull cross. And now it's kind of working on this rising wedge characteristic on a bearish divergence on RSI, bearish divergence on volume, and it tapped the 2618 as well off of this pattern. So this also likely needs some time. Lots of volume support though on the way down, so I don't think this is going to have some massive decline anytime soon, but the top is probably closer than the bottom at this point on this pair at this specific time point, especially once it broke the local high here. It just looks kind of weak overall, even though the trend will likely remain intact and it'll probably be fine in the long term. In the near term, I think this needs some time to relax a little bit. Targets were hit. You know, if I was trading this pattern specifically, I'd be out of the trade by now based on where price is sitting. And if we look at the comp ETH pair, it's been unable to maintain anything above the cloud on the daily, unable to maintain anything above the 200-day moving average, and is really just heavily ranging at this point. You could argue There's a multi-month bullish divergence here, lower lows in price, higher lows in RSI. But trend-wise, it is not in your favor to be long based on this, and really based on the historic activity of comp. It just has been unable to outperform ETH kind of on any time frame. Maybe from January to March. You could say it had a little bit of strength, but it couldn't maintain that overperformance. So overall, I like comp. I like lending and borrowing. It's really what DeFi is all about. TVL is massive. Borrowing volumes are massive. It's easy to use. Probably the best thing about it. Anybody can go in there and borrow or lend, should they so choose. On-chain activity for any of these tokens, governance type tokens, is kind of muted and pointless, really. I mean, at the end of the day, I just look at it to make sure nothing weird's going on. Technicals for the USD and BTC pairs look like they need a little bit more consolidation before any further continuation, but do look bullish and still look fine for continued moves in the mid to far term. And comp ETH has just failed to ever show any strength really over an extended period of time. So it's hard to expect that there's some sort of long trade here. Not that this setup is mega bearish. It's just there's nothing that excites me about this chart. Lastly, I'll just mention the ETH-BTC fund for Techemy Capital on Enzyme.finance that I trade. You can see AUM, performance, allocations, all the trades I make, deposits, withdrawals. You can get in and out. There's no mins, no max. You only pay gas on the way in and out. You can deposit ETH or USDC. Non-custodial portfolio management into a smart contract allows me to take that and trade it into ETH or BTC. And then on the other front, we have a managed DeFi portfolio, which has 15 to 20 DeFi coins basketed into oracles, dexes, dex aggregators, lending and borrowing, and miscellaneous. And we do have comp in here, currently at a low total allocation, which I'm okay with considering where the price sits. But I think it's fine in the long term. It's a fine buy and hold if you think DeFi is going to be around for an extended period of time. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.